Investors. So 10 days ago I made this risk and reward analysis on Intel, and on purpose I didn't answer the comments because I wanted to do it together with you, because your comments actually give a great representation of what the market thinks about Intel, the bullish, the bearish thesis, and how at some point you cannot really know what is going on and what kind of an investment it is. So I always say, and Buffett says, invest when it is in your sweet spot. And now with the comments, you might see whether Intel is in your sweet spot or not. I wanted to do this live, but I haven't invested the time to understand how to do it via software and everything. Nevertheless, I'll do it as fast as I can. Here it will be live for me, and then when I figure out the OBS software and everything, I'll go live so that we can also do these things, that you can see me and discuss these things live. So let's start with the first or the last comment from Frank here. And he discusses, just like with the EV business, there is a lot of competition with lots of investor money flowing into these markets. NVIDIA, AMD, TSM, Tesla, Rivian, NIO. So even though Intel and, for example, Volkswagen are companies with very low PE ratios, it is difficult to predict how the shifts in these markets will play out. In that regard, it's more or less playing blackjack with the stock market. These companies can either go bust or will double, triple. And with that exceeding 200 billion for Volkswagen, Intel 45 billion, these stocks might just fall over the edge when the recession kicks in. Well, I would say here that 35 billion isn't that much for Intel. Just 1 year of cash flows, or 2 years of just 2 years of cash flows prior to the huge investments. So that is one factor. And on the competition, that certainly is there, and competition is certainly a factor of risk. So that is certain. There will be much more on competition, so we will touch more there. So another great comment here from Mike Mondano. Intel signed its debt warrant when they decided to manufacture in the US, and it's an incredibly harebrained idea. Don't worry, they will receive money from the government. This is actually a great comment, because shifting production from China, from Taiwan, from wherever these chips are made, and thinking that it will be easy to just shift somewhere else and produce with the same profitability without issues is maybe really a harebrained idea. I think that Intel will do its work, will do its work, but that there will be many issues and delays that make it risky for investors. That is a certainty there. So excellent point, and we will see over the years how this develops and how this develops and materializes or not in the future. So Intel has become a speculative stock for value investors. Yes, because from bean counting, it went to growth. So even for value investors, it became a speculative stock. I will come, so Philip Ray Jones, so a fairly junior investor, discusses how all of this, what I summarized in my video, could have been received, all the content on Seeking Alpha or Intel's earning materials. Of course, I did it in 11 minutes. If you are a junior like Philip here, then you have hours to spend on this. So that's one in my defense on summarizing things and giving value on YouTube, I think. And then something extremely dangerous here that Philip discusses. What I would expect from YouTube influencer / broker is to present an opinion, prediction on what will happen based on currently known facts. Yes, brokers do not know the future, many things can happen, so therefore their either will come as fools if wrong or as another Buffett's if they're right. It's always guessing, and that's why broker is very hard applications. Analysis above, again, in my opinion, can do almost everybody. Okay, good luck with that. Experience and knowledge regardless. That's very disappointing. Well, I have just one simple answer for Philip here is the fact is that when it comes to investing, just 1 out of 1000 hit your sweet spot. The other 999 is risk and reward with unknown outcomes. So you have to see whether it is in your sweet spot. We are, of course, looking at Intel. We don't have to swing at it. Investing is about mostly saying no, next, 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 until you find something that is in the sweet spot. And my work here was to summarize everything, put it into 11 minutes, what you would have to spend hours looking and seeking alpha, etc. And that's what I tried to do here. So good point, but as I said, junior, so you will get that with time, Philip. Let's go, and there were great comments also down, but let's stick to answering. So I was wondering whether these fabs that Intel is building could be considered a moat. My logic is that these fabs cost billions to build, so newcomers can't just walk in and build one themselves. AMD and Nvidia don't have fabs. Furthermore, they are making an essential product with high economic and geostrategic value for which the US and EU have pledged completely in debt countries in subsidies. Can anyone tell me if the thought process here is right and or I'm misunderstanding what a moat is? I think your process is correct, but we as investors want to know the return on invested capital from Intel's spending, even after subsidies. And keep in mind, governments can change their minds if things don't go as planned, etc., etc. That is the uncertainty. Then Michael says Intel is not yet the alternative for Samsung or TSMC. It is unable to produce many chips to the extent that they ask TMC to produce it for them. From that perspective, doubling the production capacity does fill in the demand for ever-increasing chips on the market, but it does not allow them to access the production of high-margin, complex chips. They will simply start producing easier ones at smaller margins. If they execute well, they will earn average returns. If not, there will be a big loss. It's risky as the technology changes super fast and it eats up enormous amounts of capital. That is what we investors are interested, the capital. If it goes to the design of the chips, they have outdated technology and cannot compete with Nvidia, Qualcomm, and the like. If all goes well, there is small upside to 170 billion market cap. If not, all things go well, it will land at 100 billion and stay away for years like IBM. Up to you, I won't be buying, and as he said, too many unknowns. Great explanation of the Intel thesis. Of course, we are already now at close to 100, so one could say risk is low and the upside is there. So you can lose maybe temporarily 50% and 2x upside in the long term. But that is then the risk and reward, and you have to see always whether you have better plus the 5% dividend. If and when recession comes, Intel should be one to buy. So we are, okay, aren't we already in a recession? I don't get why this should be better in recession, less spending on chips, less everything. I think Intel will get hurt like others in a recession, especially with the investments it is making. We have seen a 10%, 15, 20% decline in revenues just already in the last quarter, which is terrible. Now, next from Show. Intel is sub 30 now. I suspect its price has not bottomed out yet. It's already at 26 now. Even for value investors, it would be wise to deploy your capital at the right moment. One must also ask, will the chips produced in the US be cost competitive with chips made from Taiwan and Korea? Don't forget Samsung. Of course, please reply to me when the moment is right. Of course, nobody knows when the market will bottom in the short term, but it is about the value, the long-term value. But those are excellent points. And Intel as a growth stock now has certainly many uncertainties. When to buy, that can only be known later and very difficult to know now. So, Dieu et mon droit honi French, I don't know. Hello Sven, for me Intel is very interesting because as you say, they have already made their investment. They made 100 billion investment in the past. They will make another 20, 30, 40, 50, 100 billion over the next 5 years. So it's not really that they made it already. It's unlikely that they can go bust, and in the case of Taiwan is of course a hedge. If we have to buy all the chips from Intel and Korea, and who knows, maybe even Korea will get blocked, then well, it can be a hedge against that. So it's really a problem to hold it for years with a 5% dividend. I'm also thinking, okay, will the dividend be cut or not, depending on the markets? And if we have more earnings surprises like the last one, also the dividend can be cut. It's unlikely that they will cut because it is what makes the stock attractive now. Until the growth arrives, you get the dividends. Even in the worst case scenario, you are not really in a bad position, and the payout ratio seems good to me, so they can even keep increasing it like they have done it in the last few years. It looks like the market is too much pessimistic, and as Buffett says, it is when people fear that you have the best opportunity. Of course, now, all the noises around are blinding people from the basics of the business. Only time will tell if I was right, I guess. So that is correct, and only time will tell. I wish I have a crystal ball, but I don't have it. So we will see how it will develop. The long-term trend, of course, we are now in the down period from that chip demand perspective, but the long-term trend is extremely positive, and there is still shortages of chips. I still haven't gotten my thermostats for my house, so it's really, really an interesting market scenario with a lot of negative things now in the market, a lot of noise, but the long-term trend is pretty clear that should help Intel. How much it will help, time will tell. Let's see, Leon what says, hi Sven, why speculate on Intel's success in the coming years when you can also buy Google at a PE ratio of 18 as we discussed in the last video in addition to the YouTube portfolio? That's an excellent question, and actually the answer is that you have to compare your investment opportunities. So we discussed the risk and reward of Intel, the risk and reward on Google, and now it is up to us investors to compare the opportunities. Intel has its risks, but the lower the price is, the lower is also that risk. At what risk will be the bottom? Usually we did mention, I think a few years ago, that when it comes to these chip makers, when they come to book value, then they are close to bottom. I don't know from the top of my hand what is the book value on Intel. You can write it down in the comments and then we can see. But when close to book value, then okay, we might also start seeing it bottoming out. Okay, do you think that determining the quality of Intel, one must have a good understanding of the following? Pestle analysis, good understanding of the 6 microenvironment actors that affect the company. Porter 5.4 says a good understanding of the company's key performance Indicators, having a good understanding of the trend in which the company is moving. Is the business getting better or worse as the time goes on? So, of course, Intel lost a lot of market share and dominance it had over the last 5 years, but that's exactly the reason why it is cheap. And if we look at the macro, the positive is that the strong tailwind is there for demand for chips. And do you think that understanding more in these areas is more important than DCF? Yes, it is. It is extremely important to implement these into DCF. So very good points to understand, to compare. And then again, investing is about the more you know about a company, the better. Okay, I have automatically, you bet. Sorry, Jakob, saving time. So what is your opinion on Costco? Best company in the world. We might check it out. Also in the 10 stocks, but I think it always is expensive. It was expensive. I checked it out a few years ago. Okay, really like the video, proper quality and highlights your platform is a great way. Very good advertising. Okay, one of the best things out there for research. Would consider dropping the price. Okay, good point. I agree that what you said about Intel, it's a long-term play, and at the end of the day, if you have bought it and call yourself a value investor, this is a test of whether you can hold something for the long term in bad times. I think Intel will deliver good returns in the next few years, but I also think it could get much more ugly in the next few months. We'll have to see. Great content as usual, and please make more videos to inform your platform. Okay, will do. So the point here is that even reinvesting the 5% dividend over the long term should get to positive returns. So that is one. But then again, should you reinvest in Intel or into something else? Because the problem also with Intel stock is also that everything else is getting cheaper too. So that's also something, and compared, then also Intel, the stock price went down 50%, but all them tech stocks and everything went down more, so everything looks more interesting, and then you always compare with others. Intel has much more assets and production capacity when the fabs are completed. You buy much more company for a lower price. Good point. So that's likely the case. Again, on the book value, on the investments, then we are already talking about something. Okay, MV, great stocks to watch. Yes, we will learn a lot around over time on what's going on. Mr. Don't Buy Analyst, of course, I don't own any Intel with my own money. And the point is that we look for those analyses, and then only when something hits the sweet spot, we buy. That's, let's say, real value investing and not the shenanigans on YouTube or something that we did in the past. So I'm just rethinking my strategy, and we'll see over time how it goes. Give me another few months, and then we'll start buying and see what we buy. Intel is a buy for their Foundry business, collaboration with Samsung Electronics, and relationship with US government. Not a typical growth stock, as it still pay a dividend, big capital, so in my opinion more of a Peter Lynch turnaround. Yes, but then Peter says that one should wait for things to start improving for the best moment to buy. So again, then we should be looking at 2024 when those margins start going up, when things start to improving, and when the first benefits of all these investments start coming in 2025, 2026. So maybe Intel will be a better buy at 40 2 years down the road and taking 40 to 80 than now at 26. That's also something very interesting. And speaking of Peter Lynch, they should try to expand into cloud so they can be a service company too. I mean, with 30 average, okay, you can try to expand, but there is a lot of competition there already. All right, L6 Urim has discussing Intel has been falling like a falling knife and competition has not been idle either. Their time of monopoly is over and they have been losing market share and they are falling behind. As I see it, after the semiconductor shortage, chip makers were incentivized to build more fabs. Countries realized that they need fabs in more places around the world. Once all those fabs will be up and running, the shortage will be over and competition will be very tough. There might be even a period of overabundance or capacity. That's an excellent point, actually. From a value perspective, it looks interesting, but there is risk in execution, in competition, and not to mention the looming recession. Question is where to catch this falling knife. Perfect summary. The answer, we will get it only in the future. Closer to book value, 20% below book value should already be a higher and higher margin of safety. This analysis ignores the product's competitiveness. Very interesting, but that is why the analysis failed originally a year ago and continues to fail. Intel has the best products if the year were 2019. If something happens to Taiwan, drive to Best Buy that day and buy stuffs on the shelves. This is a really great comment. And actually, an excellent point. Intel is losing those niche businesses, and I was very, very surprised with the 15% drop in revenues versus expectations in the last conference call. That's also a big reason for the drop in the stock price. So, great points here by Doug. And on the other hand, you have the positive trend, structural trend for more demand, but with more capacity. That might also be an issue. Secret Money Ninja, I almost bought some into my IRA, but I think it's got further to fall. Multiple billion-dollar factory is being built. AMD is eating into their workstation chip revenue. Their huge flop on GPU in recent memory. The CEO has said that their next quarterly is going to be a mess. Yes, that's correct. The impending recession that is most certainly coming, layoffs, it's going to take a huge bite out of this overinflated money printing everything bubble. The Fed, blah, blah, China. So thanks for sharing. And that's exactly what the market. Everybody is waiting for more certainty at a lower price, and therefore, if you look at the stock price, any stock price, let's do Intel here. Intel stock price, a stock price, it either goes up or down. There is no in between. So either goes up when everybody is exuberant, this stock will go up. Then when it is up, then it at some point it reverts and people start selling because they think it's going to go lower, 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 lower. Then they think it's going to go up. Then you have these trends up, down, up, down, up, down. Here everybody thought, great, here there were these crazy ups and downs, up on exuberance on growth, and now down on this is terrible and better to sell, sell, sell. This is really maximum point, and we are down 50% from the maximum point. How incredibly how things change in just 1 year. And now everyone thinks that this will go even lower. The pressure on the selling is going bigger and bigger, and there is no reason to hold, and therefore it goes down until it completely changes and becomes real value. Let me know again in the comments at the book value. We can check it also now. Intel equity. Intel, shareholder equity. So we still have we still have, oh, here we are, 100 billion. So we are close to price to book value. If you want a margin of safety, then it should be lower. So there were profits that pushed this higher and higher. And at some point, there will be a margin of safety. And with these chips companies, it's usually close to price to book value, where you can be more certain than even the cash flows and nothing, because they invested this much and that should bring value in the future. Let's continue. And as Bernd says, okay, at below book, good strategy. At some point, it will rebound hugely. When people start thinking it's going to go up, it will go up. It will shoot up like crazy. Sold Intel at a loss a couple of months. Didn't make sense to hold them when I could have put that money to work and have gotten some decent returns. I like Intel for being an American-based foundry, but that will take a while to ramp up, and all the other news around Intel has been bad. Of course, that is why the stock went down. And this actually, Richard explains greatly what the market thinks. We have to analyze still NVIDIA and then compare it. I think it's a completely different beast that Intel. If everyone thinks that, then of course it will drop. Who will blink first? Who will start buying? That's a question. Intel won't go anywhere as it got a huge moat. Fabs from a risk reward, it's a highly positive scenario. There is Intel, Samsung, and TSMC, and okay, there are more, but that are the big three. And definitely, yes, there will certainly be value there from some perspective. Recession and everything. The market always thinks short term. Okay, this is a scammer. Crazy how many scammers. I don't recall you ever analyzing FedEx. Could be for a future video. Okay, I will leave this unanswered so I can put it and then make it for Sunday in the 10 stocks videos. Intel won't be allowed to have good profit margins for years, and the US government wants them to become TSMC2. This takes years of fine-tune and costs a ton even with stimulus. Then is Nvidia, AMD eating their lunch, both consumers and technology. But honestly, I was pretty bullish on Intel when Gelsinger was announced, but after seeing no real progress after 2 years and his prefers high compensation, I don't trust the CEO anymore. So Gelsinger, yes, that was the one that made it shoot up and then crash down as the growth stock mania passed. If China invades Taiwan, Intel will be the only player in the market. That's again correct. So we don't know whether China will invade, what will be the sanctions, what will happen if it happens, and that is investing. And that is the environment we are investing in, but again, we don't have to swing at everything. Intel has lost a lot of credibility because of its complacency and poor management while it was the market leader. Now AMD is driving innovation and Apple is switching to its own chips. Intel somehow managed to lose its edge on competition, and it might take a while, if ever. Of course, Intel is not only that, but big important segments for sure. Thanks for the short signal. Okay, whatever makes you happy, my friend. Interest, holy crap, from Germany. Interesting viewpoint on Intel. At the 20 billion groundbreaking ceremony in Ohio, Pat Gelsinger actually mentioned of possible delays. Of course, he's now already starting to put that into expectations, so it isn't that much of a problem. But these are huge investments and delays are normal. Intel's investment in Ohio comes on the heels of the company's announcement to build 2 new fabs in Arizona and its expansion in New Mexico to add advanced packaging capabilities. So I would use a dimple rule from the Dando investor: avoid greenfields. Intel could have a lot of greenfield related delays, aka downside from construction Intel is a pass until most of the Greenfield becomes a brownfield or is fully commissioned. Okay, and now here is, but if, and that is always the issue with investing, when this becomes a brownfield and is fully commissioned, if everything is okay, Intel will be at 80. That happens, Intel will be at 80, not at 26. And that is the investing. You never know. You have to imagine, okay, worst case scenario, it goes to 20, price to book, value bargain. Best case scenario, it goes to 80. So as I'm reading through these comments, there is so much oversold sentiment that I would think that Intel, if you like owning it as an investor, it starts to get interesting. I'm buying Intel because I believe they have a bit more flexibility in their manufacturing, so you should probably not listen to me at all as I am down. Thanks for sharing. And here an excellent point from Jack. Market value stocks very differently in the short term. I know value investors spoke about Alibaba similar fashion. Now they're all bag holders. I'm certain Intel will go to single digit. Wait till then to open position. Don't be a bag holder. Macro is bad. It could go worse. That is certainly correct. Oh, here we have the book value, $24. So Mobileye not valued anymore at 50 billion, likely lower now in the current environment. So I don't think it will go to single digits given the book value. We are all using chips, you for watching, I for writing it, or for not going live, but that is the investing. Okay, Skywater Tech, not my circle of competence. I think better to go to a tech guy or something like that. So EPS is down and the current dividend payout is 1.36. So 60-70% on earnings per share, but they will find those 5 billion likely on the 10, 20, 15 in operating cash flows they should make, plus the investing. But as Philip says, the dividend here is not safe, and if they cut it, the stock will go down with it too. When something is cut, especially if people are projecting it, whether they will cut it, that's very, very difficult to know. Let's be honest, most people had no idea why they bought Intel. They just heard chip crisis, so they bought the largest blue chip. Now they realize what they bought. Good point. I think there must be some value in Intel. It's not that easy. Things can't change from making 20 billion a year in free cash flows to being worthless. So that's also something to think about. I have to admit it's gotten worse than expected with Intel. That's correct. And that's a big part of why the stock is down. And I agree that will probably take until 2025. We see a significant trend upwards, since it's then their new fabs will be up and running, if there are no delays. I'm a bit worried about Xeon processors. Raptor Lake looks decent, and we'll see if Meteor Lake delivers or not. Their GPUs weren't top of the line, but they look very promising. I've recently bought some Samsung. They have a pretty strong position, decent valuation, but I think with both of them you need great patience. So that's the story. Nothing wrong with that. Let's see what Paul says. Another good one, Sven. My gut tells me as interest rates increase over the next 3 months, that will push Intel even further down along with most of the companies. Of course, I may buy more at 27. Yes, I know, cannot time the market, but the contradiction is that Mr. Munger, you make money by waiting. One of many contradictions in investing. So that is a great point. At some point you have to start buying if you like the company, if you like owning it, and if it is better than the other opportunities, then of course. No US company can make fab plants like Intel can. This is a national security thing that Intel must succeed. As an American or European, you want Intel to succeed because otherwise it will be TSMC and will be taken over by China. Then good luck getting our chips for our F-18 fighters. That's again something that maybe the market is extremely pessimistic now, not focusing on this, but this is a factor that they focused a lot a year ago when the stock price was much higher, not anymore. Intel is my biggest position. I feel safe having my money sit there. 37 average, my last buy was 29 and my div is being reinvested until it goes above my average. So you should not anchor your average because that's anchoring, but you can then see whether the risk and reward is still good. I feel that sooner or later it might go above his average, which is still good. Clear analysis, as always. I wonder if your thoughts on Micron have changed. I know many, we have to analyze. Okay, we have to analyze. Let me snip this and then also put it as an analysis somewhere. We have to analyze Micron soon, also to compare it with Intel. How many times out of 10 is a stock value simply because it's junk? 9 is the correct number. Only 1 isn't a value trap, even if it looks like value. This is the sad truth of value investing, my friends. How many more do we have? Okay, we can do this. Oh, it's really a lot. Thank you for your comments. I will stop in 5 minutes probably. Intel seems speculative, where I would count on something that might happen or not in 3 to 5, 7 years. As the Asians, Chinese are very competitive here. Great points, which could be one of the reasons for somebody trying to create trouble with regards to Taiwan and other places. Just my 2 cents. They are leading. Intel is not. Comparable with the scenario of Facebook with TikTok. Great point, and a core issue why the stock is cheap. Intel is today where IBM was in 2011, a pivotal moment. It's very hard to turn around such a big ship. If they just do the talk but not walk, their walk will become irrelevant. Few people today know that IBM used to be the leader in almost all corporate IT, and nothing big could be done with them. Great point. Another risk, so many risks, and those risks are reflected in the stock price, but how much is the key question. Intel will have negative growth for the next 3-4 years. Positive growth is dreaming, and that could also be correct, and with negative news coming forward, then the stock will also follow. On my side, with my formulas taking into account the different equity values, intrinsic value of 48, of course. Okay, looking for clicks, that's gone. Thanks for sharing. Okay, we don't have the inputs, they're hard to know. Do not invest, they lost key customers, they are so behind everyone else. The only reason you should trade it is because they are getting money from the government. Now, the governments are also fickle, so you never know how and what they will change. That also changes. I love programming and think semiconductors, including the Intels, are some of the most amazing achievements of mankind. Every day my mind is boggled again to find out how much work my tiny machine can do in the realm of nanoseconds. How they are everywhere and powering everything. But that is very unpopular opinion. The consensus seems to be that Intel's products are a joke, garbage, slow, outdated, embarrassing. It's valued almost as it were a trash company about to go bust. Warren Buffett has a thought experiment where you only are allowed to buy 10 stocks in your lifetime, so you had better think carefully about buying. I would use up my one of 10 choices on Intel at 26. And that's it. I also feel that Intel might do good, but people, it's hard but it is hard for people to survive the ugly. Plus, herd behavior sell when everybody is selling. Grazie Piero. Scevademo in spiaggia. Intel does not have to be better than ADM still to be successful. It's a big market. And my voice is going slowly, so I apologize for the last comments. I will try to answer them later tonight. I'm also going back to my research. We'll try to figure out how to do live. Let me know in the comments if you enjoyed this, and you'll see me in the next video for sure on copper tomorrow. Big thesis that I have prepared.